bank profitability. I like to end our show right before we get to our questions for the show, talking about our banks. And our banks are, no doubt, they're struggling. Their share prices are down. They continue to increase dividends, which is great. We know that Canadian banks always seem to increase dividends every year, and that has never not happened since we've been keeping track. But bank profitability is down, right? As interest rates move higher, banks are being forced to pay out higher interest on their savings accounts, on their high interest savings accounts, on the GICs they provide. They're starting to see an overall slowdown in the economy. So people aren't borrowing as much as they were before. Businesses aren't borrowing as much. We're not seeing as much capital markets activity. A lot of companies aren't going public anymore. And recently, OSFI, which is the governing body for our banks, has forced our banks to increase the amount of money they've set aside for bad debts, for defaults. And I guess we could start off by showing some of the bank charts here. TD Bank, we can see that chart. You can see how much the TD Bank stock has gone down over the past little while, trading with a dividend yield now of almost 5%, something we don't see often. Another chart on Royal Bank, our largest bank. You can see that bank stock hasn't fared much better, probably a little better than TD, but not a whole lot better. And lastly, our third largest bank, so those are the two largest, third largest bank is Bank of Nova Scotia. You can see the Bank of Nova Scotia has not fared well. In fact, if you buy Scotiabank shares today, you would earn a dividend rate of almost 6.5% because their share prices have fallen. So to me, what is OSFI saying, the regulators? What are they saying by telling our banks to hold more capital in reserves for a rainy day or in case of default? Well, they're saying that they see defaults down the road, which in my opinion contradicts what the Bank of Canada is saying. Bank of Canada is saying we need to raise interest rates because things are too good. And on the other side, OSFI is saying, well, things are probably going to get worse, not better. So who is right? I guess time will tell. But overall, in my opinion, banks are having to hold more and more capital on reserve. And our chart we have here, one of our last charts, we talk about domestic stability buffer. And 3.5% of total risk weighted assets has to be kept on the sidelines. We know our banks hold a lot more than that. The chart on the right shows that our bank actual levels were 13% as of April 30th, 2023. So we can clearly see, and these are our top 6 banks that are systematically the most important banks in our country. They're being told they need to keep more and more on reserves. This is obviously eating into profitability at our banks. But make no mistake about it, I think our banks will recover once we get some stability in interest rates. Once the banks understand the environment they're in, you couple that with a good dividend and the possibilities for future growth. And I think these bank stocks still make sense for the average Canadian or international investor seeking growth and income over time.